Good morning, traders. I didn't get to do a weekend video. This will be my first of the week video real quick here. Some takeaways that I got going on early on this morning. If you use the anchored VWAP based off of January 1st of 2023, we literally broke down in the overnight session, broke to the bearish side of the greater trend on the SPY. So be very mindful. We opened up Sunday night, gapped up, gave it all back, and now we are currently trading below that anchored VWAP. Okay, heads up on that. So that is a very important development that we have happening here. That's why we can't seem to hold a bid in the markets. We've got a nice little gap down to kick off the week. Okay, so now we have massive overhead resistance above us here on the, well, SPY too. I can actually put a box here too on SPY because now we have massive overhead resistance breaking in that situation. Um, so should be very quite mindful. We're just seem to be falling. We did have a lot of pundits talking about this being a Black Monday. If anybody remembers, Black Monday from the 80s was a very bad, very bad day. So we'll see what happens here. It's also being driven by the bond markets today. So we're breaking back below the 2006 lows this morning, hitting new 52 hot 52 week lows on the TLT. Uh, if you get down to the 2004 lows, if we just tag that down there, that will give you a headline 20-year lows on the, not necessarily tag it, we overshoot it just by a tad. Um, we will have the headline 20-year lows on bonds or 20-year highs on 10 years. Okay, I think that's where we're headed. I think they want that headline, the 20-year thing. So just be very mindful of that. We have VIX and breakout going on here. Other things going on real quick here. We do have VX futures in backwardation. If anybody doesn't know what that is, you go over here, pull this chart up real quick, pull up trade. VX futures. This is the active contract right there. Current price is 21.40 45, I think. 21.45. You go out about 50 days, it's 21.31. So basically, anytime the front end contract is greater with in a normalized state, the longer end contracts are always supposed to be worth more than the short end contracts because of time. Okay. Whenever the shorter end contracts get elevated above the longer term contracts, that means they're in backwardation. A very expensive market to be buying options. If you're out there going buying options to be trading, you're paying a very rich premium right now to be trading, buying and trading options, directional options. Basically, this is an option seller's market now because the front duration now, you've got premium sellers who are really active right now. They're trying to sell every little pop up, every little pop down. They are trying to position themselves because the premiums are so high. Uh, take in as much as that premium as they can. Ideally, what they want is the option makers. One of the best things that can happen, or option or writers, one of the best things that can happen to them is the market not to move at all. And that premium just decay because the premium is jacked so high. So they're in this end camp. They'd just rather have the market not do anything, you know. And but they're taking the risk that the market will continue to do something dramatic. Other little takeaways that I'm seeing in the markets this morning. You see how this trend line wicked out right here. We had a volume void right here. We just recently wicked off that same level. Okay. And you notice how once we got below this trend line, the weekly, which we're going to have a gap down today, the weekly gap down last time. Last year, we gapped down away from that trend line last year. So just be mindful of where we're at. We're at a very a very risky little area here. Now, if you go over here in the smaller time frames, go over here 30 minutes, 20 minute, whatever, that trend line is right below where we're currently bouncing. Okay. So we actually haven't come to a hard test of that trend line quite yet. So just keep that in mind. You're coming in here, you're wanting to buy the dip. You know, we know how critical this line is. We're probably going to hit it today. At least hit it, maybe possibly even break it. Probably going into the open, we'll probably be back on to on this trend line, setting up. Remember we had just last year we gapped down. Once we crossed below this, we gapped down and didn't look back. It just continued just to the downside. So be quite mindful here on tech. So, quick takeaways. Apple's in the news this morning. Foscom is under investigation in China for something that they did. I don't know. So it's driving Apple shares down this morning. So it reminds me of a situation you never turn the Arab saying you never turn that you never pass away on a good crisis, and that's exactly what's going on here. You got China going after Apple. You got Europe going after Google this morning. So yeah. 200-day moving average is right here, right at the top of this box. Go down here in smaller time frame. Okay, if you come down here, top of the box, 200-day moving average. So, just be mindful of that. Apple probably a little bit more fuel to the downside. We're going to be right into the 200 daily moving average before earnings come out here. So are they just trying to wash out all the longs here just so they can come in here and prop up the markets? And remember, as a Wednesday and Thursday, we got major earnings coming out here, and it just, they're washing out all value, optimistic value before these earnings coming out here. Is this the ultimate just to wipe out the bulls so they can smart money can come in here? I don't know. Just be mindful of that. Uh, we could very well be putting in a significant bottom. I mean, we'll see what happens. Okay. The other thing, like I mentioned, Google this morning. Give me a second here. Okay, Google is way away from its 200 moving average. It has been on a massive run up this year. Okay, and if you put RSI on there and stuff, there is significant divergence on this run up. So yes, it's on a lighter volume to the upside. There's a 50-day moving average. There's the 20-day moving average. We traded closed below the 20-day moving average there Friday. Now, if you go back down on that smaller time frame, you see what's going on here. We just bounced off the 50-day moving average. I just put that line right there. So this morning we are bouncing off the 50-day moving average on Google. So be mindful of that. Might be a very critical support zone waiting going into the earnings coming in out this week. Those antitrust concerns also relate to Meta. We've had one massive up move in Meta since the first of the year. If you go here on the smaller time frame, let me zoom in real quick. Oops. So we lost the 20-day moving average there Friday. The 50-day moving average is it's right below this anchored VWAP. Let's go here on the smaller time frame. Okay, here's our anchored VWAP. So we're right above the 50-day moving average. That suggests we're probably going to have a little bit more downside. I haven't updated the market maker moves yet. These are market maker moves from last week. So heads up on that. And we have a trend line down here too. So be mindful of that. All that looks towards the downside. But I don't want to have this video too long here. So just be mindful of what's going on here. There is definitely a risk off sentiment to kick off the morning, but are they just trying to wash out the bulls before major earnings hit? I don't know. I mean, what happened from Tesla has really scared the markets. I mean, everybody was so optimistic until Tesla came out. The higher interest rate environment is devastating on big ticket purchases. Uh, Tesla, we're at 205, 201. If we start losing this area right now, the next real main target's 185. So if we start losing the $200 area, uh, you know, the door's open for the 185 price target. So, and ultimately, in a higher interest rate environment, uh, stocks like Tesla have benefited from the near 0% interest rate environment. It has never had to been priced to a high interest rate environment. So, I mean, a lot of people are predicting Tesla next year will be back down into the double digits, sub $100 a share. And in large part driven because the impact of the higher interest rates. And they keep saying higher for longer. So just be very mindful of that situation. Okay. And we do have yen, dollar yen, over $150. That is, so that's the dangerous part we got right here. Is Japan going to come in here and put intervention in to keep that 150 under control here, or are they going to allow it to continue? Because they were looking this morning for Japanese Japan to come in and do intervention this morning, and it didn't happen. So that's another thing that's helping drive this market lower here. Yen over at 150, that's really bad for global economy. Okay. So, but a country like Japan cannot keep doing that stimulus, all, or without consequences. So, and they realize that. So, just be very mindful of this situation. But everybody thinks the markets are very rich. They're still extremely rich. So be quite mindful of that. Okay, guys. Okay, that's it. Like the video if you like it. Please leave comments below. I'll have a link to my Discord down in the comments. If you guys want to join my Discord, that's fine, great. And other than that, good luck trading. And remember, guys, if you're buying options, you are paying up on them right here. So the risk reward is not in your favor. So be quite mindful. Uh, you know, if you're trying to buy these options, even if it goes your way, you can, you know, if you're not very, very good at the 0 day uh, options, you really should be buying time on any option plays right now.